Good day, ladies and gentlemen, and welcome to the Old Mutual Q3 Voluntary Update. All attendees will be in listen-only mode. There will be an opportunity to ask questions when prompted. If you should need assistance during the call, please signal an operator by keying in star and then 0. Please note that this event is being recorded. I will now hand you over to the Head of Investor Relations, Langa. Please go ahead.
Thank you very much, and good afternoon to everyone who's joining us, and good morning to those who may be dialing in from the States. My name is Langa Mangale, as introduced. I head up Investor Relations. On the call with me is Yuri, our CEO. He will be leading the call, and Yuri will be assisted during the Q&A and comment session by Caspar, our CFO, as well as Ronan Tagudin, who is presently our Chief Accounting Officer. I will now turn over the call over to you, Yuri. Thank you.
Thanks, Langa. Good afternoon, everybody, or good morning, as the case may be. Good to be with you. I think I'm sure you have in front of you the operating update that we put out on the 18th of November. So maybe just by intro from my side, it's been, I think we had our Capital Markets Day towards the end of October, where we put out the important metrics that we're going to be measuring ourselves on and be reporting on going forward in our medium-term targets. We're not reporting on those metrics in this operating update, but as we made clear in the update that from next year onwards, from sort of Q1 numbers onwards, we will be reporting on those. I think internally, since the Capital Markets Day, and as we head towards the end of the year and early to the new year, the focus has moved, I think, as we spoke around taking those targets and operationalizing them into the business planning process. We've managed to catch the planning cycle to be able to do that, as well as the scorecarding process. So very much moving from sort of strategy into execution. And so that's the focus internally as we head towards the end of the year. I think just a couple of comments on the operating update that we put out. I think you will have noticed that there's not major changes from the trends that we reported in half year. So the life FEA sales continuing still about 1% up. Gross flows flat. A decline in net client cash flow for, again, the reasons that we reported in half year. Particularly the low margin outflows in investments. The single big outflow that made an impact there. Gross written premiums on the non-covered side at 5%, at least on the P&C side. And loans advances also 1% up. Impacted there, of course, there was a sale of an underperforming loan book in OMF that impacted on that. So those are the metrics that we've put out there. I think, Langa, I'm happy to go to questions for the conversation.
Thank you very much, Yuri. Judith, kindly open up the call. I do not see yet the cues on the Q&A. Please confirm on your side if you do. But otherwise, if you could just remind the participants on how to put in their questions through. Thank you.
Thank you very much, sir. Ladies and gentlemen, if you'd like to ask a question, please key in star and then 1 on your telephone keypad. A confirmation tone will indicate that a line is in the question queue. You may key in star and then 2 to exit the question queue. Our first question comes from Baron Nkomo of JP Morgan. Please go ahead.
Good afternoon. Just 2 questions. Firstly, are you able to give some color on the evolution of your CSM since June 2025? And then secondly, can you comment on Old Mutual Insure's underwriting performance so far in H2 relative to the strong first half performance we saw? Thanks.
Thank you. Over to you.
Hi, Langa. I'll deal with this. So on the CSM, unfortunately, I'm not able to give you more color on on the evolution of the CSM since the half year. We'll obviously be able to give you a full reconciliation at the year end. On the underwriting margin, we haven't seen any material impacts so still positive margin, but we obviously reported a very high number at the half year, so one would expect that to normalise more to within our updated range or at the top end of our updated range.
Thank you, Caspar. Next question, please, Judith.
Thank you. The next question comes from Harry Burter of Bank of America Securities. Please go ahead.
Hi, good afternoon. Thanks very much for the update. Can you comment on the life APA sales that you're seeing in personal finance, excluding guaranteed annuity sales? And you also noted strong growth in retail gross written premium in Old Mutual Insure, if I understood correctly. H1 was up 5%, so it sounds like growth has increased. Can you comment on what's driving that increase? Thanks.
Was your comment specific to this? I'll just deal with it. So I guess if we do look at the personal finance sales, guaranteed annuities were down close to 40%. So it's the majority of the reduction, overall reduction in 9% that you're seeing period on period. So that's what's driving that. But then we saw a slight uptick in the recurring premium sales. That's also that. So the biggest move there is guaranteed annuities down 40%, pulling back the sales by about 9%. Sorry, your second question?
Just regarding the gross written premium in retail segment within Old Mutual Insure, it sounded like it was up more than the 5% at June.
I'll just check on that and come back to you on that. We can go to the next question.
Yeah.
Thank you. Our next question comes from Bradley Moorcroft of Peregrine Capital. Please go ahead. Bradley, your line is open. You can ask a question. Unfortunately, it seems as if Bradley has technical issues, and he's welcome to rejoin the queue should he sort that out. Our next question comes from Francois du Toit of Anchor Stockbrokers. Please go ahead.
Hi guys, can you hear me?
Yes,
we can.
Okay, excellent, thank you. Can you maybe comment on your solvency level, maybe just directionality in the quarter, and maybe factoring in buybacks as well? I know you don't like telling us whether you're buying back or not and whether you like the price to buy back or not, but maybe if you can just give a sense of how much you executed in the last quarter on your buybacks. That's the first question. Obviously, the solvency level will be a function of that, I guess, as well. Your second question, your gross flows, I think, was quite a bit stronger at the half year in terms of percentage growth. Maybe just comment on the reasons for the slowdown. I think you've mentioned the annuity sales, but it seems like there's a further slowdown there since the half year. But nonetheless, the net flows improved from the half. Yes, it's outflows, but it's not as big outflows level as we had at the half year. So maybe can you just comment on your persistency or client retention in the light of better net flows and whether you're seeing positive lapse experience variances or improved levels compared with the half year. Just a sense of what's behind the improved net flows and weaker gross flows.
Okay, let me go to solvency levels first. Francois, last time looked, we had done just over 10% of the buyback, and we are required to, on a regular basis, publish what we've done. So that's in the market. So if you just look out for those census, you'll see that. And then in the quarter, in terms of solvency ratios, I would expect most insurers to have seen a decline in their solvency ratios, given the fact that the prescribed equity shock increased in that quarter. I think it increased by about 4 or 5%, which means your capital requirements for any equities that you are holding, whether they will have gone up. So, and they're at an all-time high, and I think they're 1% away from the top level of stress that they can be. So I would have expected, and we correspondingly would have seen a reduction in normalized ratio.
Francois, just to add to Casper's comments, the share buyback was fully allowed for as a reduction to own funds in our interim number. So as we execute the buyback, it won't affect our solvency ratios.
Okay. On gross flows, the second point that you raised. So the mutual investments had a higher base in quarter 3, 2024. So this year we are they're comparing against that higher base that's detracted from the current year growth. And then, as we said earlier, we had much lower PF inflows to the points earlier made, but we also had muted inflows in wealth, whereas wealth was a really strong performer last year. So we've seen a muted inflows in wealth. Hopefully that helps. So overall, life and savings were down 1% from a gross flow perspective, and that's the main reason. And then with mutual investments down 18% on the prior.
And maybe just to confirm Harry's earlier question, so the 5% gross written premium growth for all of those ensure the retail growth rate was quite similar to the total.
Thank you. Judith, may we please take the next question?
Thank you. Next question comes from Marius Strydom of Austin Lawrence Gideon. Please hold ahead.
Good afternoon. My question is about OM Bank. At the open day or the capital markets day, you mentioned you had 145,000 clients and you were adding 5,000 a day. So could you please give us some indication of whether you've seen that kind of daily addition maintained since the capital markets day, or whether it's slowed markedly, or any other information you can provide us around your traction?
So, Marius, I think on the weekend, I think parents seem to note that we were at about 200,000, and that run rate is going at about 3,000 accounts a day.
Okay, thank you very much.
Thank you. Next question, please.
Our next question comes from Bradley Worcraft of Peregrine Capital. Please go ahead.
Hi, team. Can you hear me now?
Yes,
we can hear you, Bradley.
Sorry about the issue earlier. Also a question on Old Mutual Insure top line. I noticed that the growth has slowed from 9% at interims to 7%. I mean, any further color you can give there in terms of the slowdown, persistency challenges, increased competition would be very helpful.
Over to you, Casper.
Yeah, let's try and get a proper answer there.
Okay.
Bear in my head, sorry.
Yeah, Bradley will come back to you with that detail. Judith, may I check, are there still any questions? I don't see anyone who's on the queue at the moment.
No, sir. At this point, there are no further persons in the question queue.
Okay. Thank you very much. I will hand back over to you, Yuri, just to... I think there's one question that I see. Judith, could you please check? I think it's Faizan. Yeah.
Correct, yes. Faizan Lakhani of HSBC. Please go ahead.
Hi there. I just had a question, probably not related to Q3, but are you planning to take any restructuring charges in relation to your cost program, and will any of that be allocated to full year 25? Thank you.
Can I just understand correctly? Did you ask whether we are going to be adding any further restructuring provisions? Is that the question?
Correct. Yeah.
To the extent that you have to meet quite a lot of conditions to have a restructuring provision. So if you've met all the conditions that are required at year end for a restructure, i.e. you've identified people, you've made the announcements, then it can be accrued for the year end. If you're not in that position, you have to incur the cost when you actually do that restructure. So there will be additional costs in the second half relating to headcount reduction, but those have largely been dealt with. So I'm not expecting a large provision outstanding at 31 December, i.e. a restructured provision for future costs. We'll see the once-off costs coming through in the second half. I hope that helps.
No, that's helpful. Thank you very much.
Thanks, Casper. Could you please just do a final round and check if we have any questions left, and let's take those.
Thank you. Ladies and gentlemen, just a final reminder, if you'd like to ask a question, you're welcome to key in star and then 1. We have a follow-up question from Harry Botha of Bank of America Securities. Please go ahead.
Thanks very much. Just to follow up around the loan growth issue, I think you noted the sale that had an impact on growth. What is your outlook for growth? How quickly do you see loan growth in Old Mutual Finance improving?
Thank you. Over to you, Casper.
Yes, so Harry, as we mentioned earlier, part of the reason that the loan balances are flat is we were exiting specific pieces of the book. We are expecting to see better growth rates coming out of our loan book as we still very responsibly improve our lending. So we are maintaining tight credit criteria. We do expect that book to grow going forward.
Thank you, Ranan. Operator, could you kindly check if we have any outstanding questions?
Yes, sir. Our next question comes from Jared Houston of All Weather. Please go ahead.
Afternoon, everyone. Just checking you can hear me.
Loud and clear, Jared.
Perfect. Thanks, guys, for the call, and thanks for the update. Just a question on your investment result, your shareholder investment return. Obviously, in the first half, saw a very strong number. Is it fair to assume, just given what's happened with markets, both locally and in the rest of Africa, as well as bond yields, it's fair to assume current run rate is a continuation of that strong trend.
Yes, I think it's fair to assume investors should just recall that we do have collars around, so we have a protected equity structure. So upside is limited, but we do try and roll those collars on a regular basis in tranches to manage the position over time. But yes, you should still see strong investment performance coming through in line with the markets in the second half.
Thank you, Casper.
Perfect. Can I ask
Operator? Jared, it sounded like you were going to ask a follow-up.
Yes. Langa, just the comment earlier about the progress on the buyback. I just want to clarify, did Casper say only 10% of the buyback's been completed? And then just a question mark on, we've obviously seen quite a big step up in market volume as a result of an index outflow. Is the group participating in the higher level of market volume, or is it just slowly ticking away over time?
Yeah. Sorry, like to comment?
Yeah. So obviously we would participate in the high market volume if that's consistently happening. We have to work within the limits as an issuer. There are limits around, so we can't move the market, if I can call it that. So we have to work within those limits, and then we have we're doing this buyback with this mandate with one or two of the large banks. So they have specific parameters to work within. The 10% was a few weeks ago. That might have gone up in the last week or two.
So we're just over 400 million at the moment.
Thank you, Casper and Ranen. Operator, I'm comfortable that we round up and maybe take one last question.
Thank you. Final question. It comes from Marius Strydom of ALG. Please go ahead.
Okay, thank you. Firstly, your South African asset management performance in the third quarter versus the first half, considering higher AUMs at 30 June and continuing strong market performance, should we expect a decent acceleration in your earnings run rate since the half year? And then the second question, considering the lapse assumption changes that you made and the management actions that you've taken, have you seen some improvements in your lapse experience at MFC?
Marius, just to remember, in the asset manager, a very small part of that base is equity type. So really in OMEG, you're looking at a sort of a balanced mandate. The assets that you have, for example, like Omson, we're seeing pressure on credit spreads. So the origination targets are quite standard. They might be a bit behind on their flows. And then the alternatives, you're looking at much longer valuation cycles. So I would expect the performance to increase in the third quarter, but there are quite a few moving parts.
So Marius, also just remember that most of our IFRS 17 products on VFA, we get rallies in the equity market, it goes to the CSM. It doesn't drop through to earnings. So you will see that largely coming through the CSM.
My question is really related to the asset management businesses, so those that don't form part of the CSM.
Okay.
Yeah. Thank you, Casper, and thank you, Rana.
Sorry, Langa, there was one more question.
Sorry, Langa, there was a question, Marius, on MFC persistency. So, I mean, we obviously are progressing with the management actions, but I think it's too early to call a material improvement yet.
Okay. Thank you very much.
Thank you. Operator, I don't see any questions. I'm comfortable to wrap up here and hand back to you, Yuri, just to wrap up the call for us. Thank you.
Okay. Well, thanks for being with us, everybody. Yeah, I think there were one or two questions which we're happy, Langa, to get back to the individuals on. But for the rest, thanks for the conversation. Yeah, and I suspect our next conversation will be in the new year.
Thank you very much.
Thank you. Ladies and gentlemen, that concludes today's event. Thank you for joining us, and you may now disconnect your line.